January has been an interesting month for real estate in Southern California in the 2020s. Do you know why? We're going to share with you in the Southern California Housing Market Report. We're going to show you the median home price and what happened year over year, plus take a quick look at some Altos Research Report data that's particularly poignant for the Southern California housing market. Hey there! Christian Walsh, real estate agent with Wire Associates. We have been helping the smartest buyers and sellers make the best data-driven decisions in this crazy market. So if you're ready to dive into the single-family and multifamily numbers for Orange County, LA, Riverside, San Diego, San Bernardino, and Ventura counties, please hit that like button. Diving into the numbers, starting with Orange County, we're going to run through the single family numbers in the 6 counties we cover. We're looking at Januaries. We got Januaries from 2024 all the way back to 2018. We got the number of properties that have sold. We got the properties going under contract. So the buyers out there writing offers. That is our demand. Then we have new listings, sellers who say it's the time to get this on the market. That's our supply. We want to see the balance between supply and demand. And we need to look in the past for perspective. So 2018, 2019, normal years, theoretically, nothing crazy going on. 2020 in January was just before COVID in the United States and maybe affected the numbers a tiny bit, but nothing significant. 2021 was a hot, crazy year. 2022, at this point in time, interest rates had just started to go up from the crazy low 2s and low 3s, and they started to go up. And then we got into the Ukraine-Russia conflict, and that is where interest rates went through the roof and have been up ever since. 2023, all the numbers down, as you can see. 2024, well, that's why you're here. You want to see what's going on. And year over year, we have an increase in the number of properties going under contract and an increase in number of new listings. What I want to point out is that gap between there. And when you look back in 2018, 2019, a huge gap between the number of new listings and the number of properties going under contract. So a lot of choice in January of 2019, if you're out there shopping. Choice has continued to shrink for buyers and remains low. So we can see that the gap between the number of new listings and pending sales is still very tight. So if you're out there writing offers, there's going to be multiple offers on properties that are well priced. It is still a seller's market. And the other thing I'd like to point out is demand. So what we can see, and I mentioned in the last video when we were looking at January halfway, it looked like we found the bottom for demand for the properties going under contract. And that was last year at this time. So since last year at this time, year over year, we are up when it comes to the number of properties under contract. Moving into Los Angeles, big, huge market with lots of properties that sell, and we can see that we are up year over year for new listings, up year over year for pending sales. So again, the bottom in demand and supply appears to have been 2023 at this time of year. We can see that the gap is slightly larger between the number of pending sales and new listings this year than last. Nothing alarming. We have to continue to watch and see what happens. And again, nothing like that gap we saw in 2019. Similar thing that we saw in Orange County where there was a lot of choice out there if you were writing offers as a buyer in 2019, a more normal year. Moving into Riverside, another one up year over year. In fact, you're going to find only one county is down in a number, and I bet you can guess if you've been watching these, you know which one is always bucking the trend. We can see we're up year over year for listings and pending sales. And again, slightly higher in the gap between the new listings and pending sales, but nothing alarming and nowhere near 2019. But also, it was tighter in 2021 and 2022 at this point in time. So more folks out there writing offers and more folks listing their homes. Moving into San Bernardino, so we're going to start to see the effects potentially of the weather. As we've been hit with rain, they're getting snow in San Bernardino, and we can see up year over year that bottom in the market for supply and demand, and new listings and pending sales are tight, but nowhere near where they were in 2021. Look how close those numbers were. There wasn't much out there. And Ventura, our buddies in Ventura, always bucking the trend. So up year over year for listings, but down year over year for number of properties under contract. So we have seen this. Now, of course, Ventura is always doing its own thing. And we'll have to keep watching to see what happens as this demand continues to stay down. How will that affect the supply in Ventura and the prices in Ventura? They may have a localized price drop in Ventura that we won't see in some of the other counties because we're seeing this low demand. In San Diego, up year over year for escrows and up year over year for new listings. So there's that bottom in 2023 we can see supply and demand were way down, and now these numbers are going up. Will we get back to 2018 and 2019 for demand and number of new listings? We will have to continue to track and see. If you're digging this data, make sure you sign up for a free weekly email newsletter, and we're going to go ahead and gently deliver these to your email inbox every Sunday. Diving into the multifamily numbers, everything 2+ units on the MLS, one of the only places you are going to get these numbers. Comparing January's all the way back to 2018, just like single family data. And we're going to show you sold, number of properties under contract, demand, and then supply, number of new listings, different trends than single family. One of the reasons for the differences that we're going to see in these numbers can be explained by the high interest rates, making it tougher for a property to pencil. Prices need to drop in order to get the properties back to a cap rate that makes sense in some cases for investors. And let's take a look here. OC multifamily, we see a big increase in the number of new listings. So while in single family numbers, we weren't back to normal levels of listings, we are seeing it in multifamily where we have this big increase, especially year over year. And then demand is up, and it's pretty close to being standard demand or similar demand to more normal years. But you can see there's this big gap. There are twice as many properties that were listed as went under contract. So there is choice out there for investors looking in Orange County for multifamily. So basically, you got to make sure you're well priced in order to trade. We'll have to continue to track this and see what happens to the inventory. Moving into LA, it's been tougher for landlords in LA because of the eviction moratoria and not being able to collect rent. Properties that are under the rent stabilization ordinance, I just released a video on this, they're able to do their first rent increase in almost 4 years. It'll be 4% for those properties that fall under the rent stabilization ordinance, which are the majority of the larger multifamily buildings. And we can see that increase year over year in both new listings and pending sales. Gap pretty similar to last year, not at normal levels yet of new listings in LA, but demand is also not at normal levels. So interesting to see. This chart looks more similar to what we'd expect to see on the single family when we look at multifamily in LA. Riverside, big drop last year in the number of properties that were listed, and that's rallied back. But we can also see demand is up. So we were a little worried if you were watching our updates. We saw that demand was down in Riverside, which tends to be a more affordable market for investors who are buying, tend to get better cap rates here. And it looks like they're seeing that now. They're going out there. Properties must be well priced for those investors looking out there. So we have the same number of properties going under contract as new listings. And I triple check the numbers. Michelle does a great job with them. So that's interesting to see that the supply and demand are equal in Riverside. We'll have to see where that trend goes. That could lead to an increase in prices for multifamily in Riverside. San Bernardino, see the increase in the number of properties that were listed. And then, slight increase year over year for the number of properties going under contract, but a much larger gap. Haven't seen a gap like that since 2019 between the number of properties listed and those going under contract. It'll probably be uneventful in the February numbers pretty much for multifamily in San Bernardino because some of the weather we're having now is going to be dumping snow in a lot of these areas. Ventura, our buddies in Ventura, same this year as it was last year for number of properties listed, number of properties going under contract. Nowhere near those crazy days of 2018 in Ventura for the number of listings. In San Diego, it does look like more normal years from a supply standpoint. Starting to rally back to these 130 numbers, and then we can see demand is pretty constant as well. Not quite yet to where it was in more normal years, but getting there. So pretty uneventful in San Diego as far as the inventory levels and number of properties going under contract. Looks like a pretty normal year in San Diego for multifamily. Taking a quick run through the Altos Research Report. Not going to show you everything like I normally do, and I'm going to point out a few poignant things. Number one, we're looking at the national numbers on this chart. Of course, you can subscribe to these and receive these to your email inbox. I recommend you do. You'll get them every week. So when we look at the national level, we're at a 39 for the market action index. What's that? The market action index is the absorption rate, compares the rate of sales versus inventory. So the higher this number is, the more it's a seller's market, the lower it is, the more it's a buyer's market. So at the national level, we see it's a slight seller's advantage. We're getting closer to that buyer's market. We've seen in the past this be at 100, for example, San Diego. And then let's look at Orange County. Right now, Orange County is a 51. So it's a strong seller's market. Why I think that's relevant is depending on where you're getting your news from, you got to put it into context. We could even dive deeper and go down to the city or zip code level and see how strong is that local market, and then dive into the inventory and see what it's like at different price points. But what we're seeing at the national level is that it's not all that strong of a seller's market, whereas it is in certain spots in Southern California. Always remember that context. I do think that tends to get lost. People see some national news or read about some place where things are terrible for the housing market, and they think, oh, it's bad everywhere. Please keep it into perspective and sign up for these so you get them. Another quick thing to share. So here's Orange County. I want to talk about the amount of inventory. Specifically, we're comparing the market segments as it's broken down into the quartiles, 4 different market segments, the median price. And we can see that if you're at the median of 1 million, you're 14 days on market. That is an important perspective. This isn't rocket science, but depending on the price point, the properties may be flying off the shelves, so you're going to have to be more aggressive. If you're up in the $7 million median price range in Orange County, 112 days, maybe you can negotiate a little more. Here's San Diego, and of course, the 2 bottom quartiles there. We're at 21 days on market. So again, lower half of the market there is moving quickly, but it doesn't automatically fall into this every single time. Riverside, we can see the days on market are longer for the bottom quartile than they are for the next quartile up. So if you're out there as a buyer or you're thinking of listing as a seller, you have to put it into the context of where your value fits in the market to see how much of a fight it's going to be if you're a buyer and how many people are going to be fighting for it if you're a seller. Don't even think about buying or selling real estate in Southern California without reaching out to us first. Hey, you, I caught you. You were just about to think about it. And here we are taking a look at the median home price. What is going on? Well, we can see that month over month we are down. That's not 100% atypical. It is possible and does happen that the median home price does drop into January. Should be going up in February. That's what we're going to have to track and see. And we could see year over year, 14.3% in Orange County, 5.4%. LA 5.5 and Riverside. So that is important to see that we are up year over year. And the 3 other counties were flat in San Diego month over month, but we did see an increase in Ventura for the month over month median home price and down slightly in San Bernardino, 6.9% year over year for San Bernardino, Ventura 11.3, San Diego 9.1. So big increases year over year for values for the median home price. You heard me yap on and on. I want to know what you think about the real estate market. Where do you think things are headed through the rest of 2024? Interest rates up, down? Give me your opinion. The next thing you need to know is in this video right here. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we can't wait to hear from you.